Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com. That's drstoxx.com. We've been in business every market day since October 2002. This is our primary website, drstoxx.com. There's also drstoxxtrading.com. We offer daily, weekly newsletters with my stock picks. You get my entry price, stop price, target price, reasons for the trade, technical chart, updates daily until we exit. And if you want to join me and a whole bunch of great traders in a live Discord room, then go over to drstoxx.com, click the subscribe menu, scroll down. This is coming to you today from the live options room, which launched in January this year. And you can add on the live trading room, which launched about 5 years ago, at a 40% discount. All right, that's all I'm going to say about that. So let's jump over to charts. I want to first say a big thank you to a member in the live Discord room. I'm sorry, I don't know his actual name. He goes by the handle of Underwear Millionaires, and I know that that's okay to call him that because he uses that handle in TradingView as his public profile, and he likes to tinker around with stock indicators, technical stock indicators. He built one on here that I have on my daily chart. It gives you these nice green candles when the stock is going up. It gives you red candles when it's time to abandon ship, and some orange candles when it's shifting from one to the other. I believe that the color code here on the candlestick chart is based only on moving averages. So it's a simple moving average crossover. I could be wrong about that. I'm just playing around with it for the first time today. And I'll check in with him to see if that's correct. But you can see that there's a color code moving average here. When the short term is above the long term, it turns green in between. When when it flips down to the downside, it turns red, and then it's back and forth, back and forth. So what I like about it, I mean, moving average uh, crossovers by itself is not a sustainable trading system because you're going to lose money when it gets into a choppy trading range. They capture really nice long trends, as you can see, this nice long uptrend here and this nice long uptrend here and a nice short little uptrend here. But when you're trying to flip back and forth between long and short, you'll end up losing money because eventually, as a market does most of the time, in fact, it goes into a sideways trading channel and it just collapses in terms of its range, and then you're just going to get, you know, short, long, and every time you flip, you're losing money. So, but it is a good handy tool to use, and you can instantly see whether the market is trending up or down. And then it goes with an indicator that's more of an oscillator for momentum down here at the bottom. I have this on my hourly chart, or 2-hour chart, I should say. And this one might even be a little bit more usable, practical for us. It gives you green when the stock or the trend is moving higher, and red when it's falling, and it's based on momentum rather than price, relative momentum, I assume. Anyway, I'll have to find out a little bit more about that. I'm not recommending it just yet. I'm just trying to figure it out, but I do like the visuals that it gives you on the chart. All right, I'm going to go over to the daily chart, and I'm going to start with the S&P 500. So the short story of the market for the last several weeks, since the beginning of November or so of 2025, is that the market has been in a pullback mode on fear regarding the fees of the profitability of AI, and concerned that big companies, the big tech companies that we're all familiar with, are overspending on AI, and they're not going to get enough profit back to make it worth it. They're going deep into debt to capex out their data centers and the quantum computing technology that they need, and massive amounts of service space and all of that. And the market is just a little bit worried that, hey, that's going to squeeze their margins. And market's pretty much always right. So now we're starting to get some hints finally that this capex isn't sending these big companies into a narrow, low margin kind of business. No, in fact, that the demand is so high for what they're going to be offering once all these things are built out. The demand is so high, just off the charts, that they'll be able to have pricing power, which is what you need to keep your margins high. So I think it's going to be working out for the AI trade, the data center trade, the energy trade that services those, the quantum computing trades. These are the new tech sectors, right, that everybody needs to be a part of. And I think we're going to be okay. But the market, of course, just needs to consolidate and do its thing and price in all the potential fears that it has. Now, the other concern that we have is that the Fed might be a little too late in starting to cut rates. We're going to get a rate cut next week, almost undoubtedly. And the market is really wanting more than just one cut. Not at the December meeting necessarily, but we want to see some hints, at least strong hints, that the Fed is ready to start cutting 1 or 2 quarter points each time they meet for the next 6 or 7 meetings, because we're starting to see some real weakness in the jobs market. And if the jobs market is not strong, if unemployment's going up and new jobs created are going down, which we think is happening, then we're going to end up in a recession. And the market doesn't want a recession. Nobody wants a recession. So that's another concern, right? All that, however, is totally immaterial right now because the market is looking very good. We've bounced back from the worst of the fear, right? It was a 3-wave down. Here's your first wave, and then a soft little rebound, and then a big, scary, ugly wave down. Took out some pretty key levels of support, got below the 50-period moving average, got below the 6,600 level, and everybody and their mother was saying, oh, this is the beginning of a bear market. All the fun market is over and done. Technically, they had a point, but the market is the market. And the market I always say, the market likes to disappoint the greatest number of people for the longest period of time. And the bulls got frustrated up in here when it started to falling lower, and the bears got frustrated down here when they got trapped because it shot way back up again. And that's just how the market functions. Now, what do we have going on here with this? In fact, let me see if I can get this on the 2-hour chart a little bit better picture. Let's see. Actually, let's go to the 4-hour. There we go. Because you're going to see something that I really like. So when the market does these discounts, right, they go down for several weeks at a time, and it's run out all the stops, and the dip crowd didn't show up, and then it shoots right back up again. What you want to look for after that is for some bullish a price pattern forming, and that will signal that the worst of it is over. So here is a very nice looking bullish price pattern, and if you know your price patterns, you'll know what we're looking at here. This is your left shoulder, this is your deep cut head, and then the most bullish part about this pattern is that the right shoulder is very shallow. You can have a deep left shoulder and a deep head. If your right shoulder is really flat, like this one is right here on the 4-hour chart, right, about 2.5 days of really tight trading range, mostly bullish, getting up near all-time highs and breaking out of the neckline, that's just about as bullish as it can get for a pattern like this. This is a continuation pattern, so the theory is this particular kind of pattern, which is a very reliable and very bullish kind of pattern, is that once we get the breakout, which we're getting right now, you can see it right there on the right edge. Once we get the breakout, then it will continue. That the trend that preceded it will continue after that breakout, and the trend preceding us was bullish, uptrend. It's just going north. Everything's going north. Okay, so that's all good, right? S&P looks good. Same pretty much true for the NASDAQ. The NASDAQ looked a little bit worse than the S&P on the downside. It went further down on a percentage basis. It took out more stops, more support levels than the S&P did, but that's because it's only 100 stocks instead of 500, and a lot of the NASDAQ stocks are higher beta than the S&P, so that makes sense. But you will also see here, it might not be quite as well formed, and I'm not sure where this line should go. Maybe right there. There's also kind of a little one right here. But it's the same pattern. Inverted head and shoulders, bullish, bullish, bullish. Here is, in fact, I like this one a little bit better. Here's your left shoulder. Here's your deep head. And here's your nice, shallow, high-level right shoulder. And already in breakout mode. And on the 4-hour chart, at least we're above the 200, we're above the 21, we're above the 50. The 21 is crossing over the 50, the 21's crossing over the 200. Everything is just flashing bullish, bullish, bullish. Okay, now here's the thing. Well, let's take a quick look at the Russell 2000. Also very good. You have your left shoulder right here, your right shoulder, and a nice shallow, head, and then nice shallow right shoulder, and everything like the NASDAQ is up above major moving averages and getting very close now to new 52-week highs on the small cap index. Small caps, of course, are a play on the Fed cutting rates, the weaker dollar, and basically lower high liquidity and lower borrowing costs. And when that happens, we're kind of getting a cascade of all those things at the same time. You get a nice burst in the small caps. And so here's the thing, however, all bets are off when we get to Wednesday next week, because Wednesday is when Powell takes the mic, he reads out his announcement. We learn about the dot plot, how many of the Fed governors are looking at what's their 12-month view on where we should be at 12 months from now with the Fed funds rate. And if you get a consensus around a good low number, then the market's bullish. If you get a consensus around something that the market doesn't want because it's still too prohibitive, then you're going to see the market fall. And the other thing with Jay Powell is that he tends to say things during his presser that don't really match what is stated in the announcement. He tends to be a little more hawkish or cautious or not quite as well guarded with his language when he's answering questions off the cuff. So that's a danger. And we've seen plenty of days when the Fed is making their announcement, we get the presser and then the market tanks into the close. I think, however, I've been saying that we're going to sell off on the JPOW, but because we had a big sell off and because we bounced right back again, we might just kind of be very tight and choppy into the presser. And then once we get the presser done, the market is relieved and we move on to a higher place. So I don't really know. I'm still leaning now toward a pullback on the presser for several days after. And if we don't get a pullback into the Fed, which would be, I think, bullish after, then we'll look for a one after the Fed because I think it's going to come. But if we get a little bit of softness early next week, right, Monday, Tuesday, like we had this week, if we get some softness early next week, I think we could see a good rally. But as I always say, we trade one day at a time, and that's about all we can do. It is all we can do because nobody knows the future. If we're only looking at the technicals of the market, great, absolutely great. Yeah, we had a scary drop, but it got ripped right back up again. The 4 strongest days of the S&P 500, ouch. 4 strongest days of the S&P 500 you're looking at them right there. I know it's hard to see with this indicator on there. 1, 2, 3, 4. 4 in a row, strongest up. I don't know if it was a point basis or a percentage basis. Anyway, it was a nice rip. Okay, let me take a look at a few sectors because I'm interested in, let's take a look at Bitcoin first of all. So I've had this map on. Look, we've got our first green candle now, according to my friend's indicator, which means that the fast moving average is crossing above the slow moving average. That's always a good thing, always. But I've been saying that the Bitcoin is due a relief rally, which is what this little arrow represents here, that should end up tagging or touching the resistance trend line, which is pretty well established, right? With 3 major intersections there, and there. We hit that trend line and then another leg lower down to about 75,000. That's kind of the target I've had in mind. I am short a little bit of Bitcoin, and it hasn't played out very well for me or for any of the followers in the room because I think most of us had a little bit of that on. It was a small little trade and got stopped out today on today's gap up. But I do think that the next sort of consistent move for Bitcoin is not going to be to the upside. It's going to be to the downside. I hope I'm wrong about that because I do enjoy trading Bitcoin and have done well trading Bitcoin, but we're just not getting anything like a bullish setup yet. It's still in a downtrend. It's still well under all kinds of places that you would normally mark for. If you're above them, it's bullish. If you're below them, it's bearish, and we're below all of them. And the downside momentum here is nasty, and the selling pressure on the way down was horrible. So it's possible we've got a capitulation bottom forming here in this area, with like 80,000 on the low side and 95,000 on the top side. And then we get some churn for a couple of weeks or a couple of months, maybe. And then we get the big run up next year. But I do think that the path of least resistance is another leg lower. But as I said, I'm very happy to be wrong. And here's what I would look at to say I am wrong about it going further down. And I've been bearish on Bitcoin for about a month, a little more than a month now. So, early November is when I got onto the short Bitcoin train. And a guy in my pro trading group was a month ahead of me. He was shorting Bitcoin early October. Sorry, not early October, mid-October. So when it got up to that high and it was right about in here, he started shorting. It's like 112. And I started shorting on that big red stick right there around 104, 105. And both of us were right. And we've been right so far. But eventually we're going to be wrong because Bitcoin will reverse higher at some point. And whether I'm wrong now, because this is the beginning of a nice run, or whether I still have a little more being right, and then we change our tune. But here's the thing I'm looking for. We want to see a close above the 21. That's number one. That would be about 95,000. We're not there yet. We got close to it this morning, pulled back. Then secondly, I want to see a close above that RTL. Just get rid of that RTL, put it behind us. Then it becomes support. And then the third thing is I want to see some good volume coming in and consistent 2 or 3 days of good upside. That's what we want to see. Okay, and we're not there yet. Ether, kind of the same story. I did think this was actually in a worse shape than Bitcoin because the downside momentum is a lot sharper. And typically when that happens, you just don't get out of it very easily until something shifts in the macro environment. I don't know what that would be. I don't. But there's some good stuff with both Ether and Bitcoin, of course. Funds are buying and governments are buying, and new ways of trading it are opening up. But right now they're just totally out of favor with the market. They both are. And but here's the thing about Ether. This is where I think Ether is in a better shape than Bitcoin right now, and that is that it's above the 200. It's much closer to the 21, and it's very close to that RTL, right? The resistance trend line right here. That needs to break to the upside. We need to close above the 21. If you close above the 21, you're pretty much going to close above the RTL. Then we need to see some volume coming in, and then we need to see consistent 2 or 3 days of good upside, and we can start talking about going long. Then we're not there yet. Gold, I think, has a good run coming a little bit higher, but I don't think it's going to get too much higher than the 4,400 by the end of the year. So I would say, if you're looking for, some real good upside traction that will make you some money, I wouldn't really look at gold. It might also have a leg lower because this high right here relative to this high right here, it's showing some bearish divergence, and we're starting to see some distribution. This is all distribution here. That's what caused the crash in gold. This is distribution here. That's what caused this little rounded bottom pullback. We're starting to see a little bit of that again. So I do think it has maybe a dip first and then another run up to test 4,400. Now, gold, this is my theory that gold is a good read on Bitcoin. So if people are still out there buying gold and it's still going up, and it's very close now to all-time highs, and Bitcoin is down at 52-week lows, what does that tell you about where people are putting their asset investments? They're not putting it in Bitcoin, they're putting it in gold. So if Bitcoin is going to have a moment, a bullish moment, it's had a lot of bearish moments. If it's going to have a bullish moment, then we should start to see gold cool off quite a bit. All right, that's my tip for the day. Natural gas. So we're long natural gas in the live trading room with BOIL, which is the leveraged fund for natural gas, and it's just been doing great. Keeps going up and up and up. We're long some silver, also in the same room. AGQ leveraged ETF fund, just going up and up and up. Both of these will top out eventually, but these are momentum trades. So we're going to have to see probably some kind of shift in the macro for both of these to start coming back in. And I don't think we're quite there yet. They're not a buy, though. They're a hold. Both of them are holds, not buys. Okay, what else? I wanted to look at semiconductors. So it looks a lot like the Nasdaq. Only instead of printing a right shoulder, right? Here's your left shoulder. Here's your head, and instead of a right shoulder, it's just going up. It's not going kind of turning sideways for a little while to print that little base that we saw. It's just going straight higher, despite some real weakness in NVIDIA and AMD. So we took a nice profit in AMD, got out of it yesterday when it was starting to roll over at some resistance, and it's only lower still today. Same is true for NVIDIA. We're short NVIDIA. Just short-term trades, just trying to, diversify a little bit and give ourselves maybe a little bit of bearish exposure in case things go south. But so far, so good with those. But the rest of the market, the rest of the semiconductor market doing really well. What else am I interested in? We are along regional banks. I think they're doing really well. Just a good, strong breakout, follow through, momentum to the upside. Volume's kind of light, but it was light last week because of the holidays. Hasn't really picked up in most sectors yet this week. So where's this going to go? Probably 65, 66, and we're in the calls. What else did I want to look at? The home builders are doing really well. They're forming a nice little 4-bar base after a very strong rally off of some deep cut lows. Homies they'll probably do a little bit of a dip here because there's a lot for the home builders to have to worry about. I'm not sure that's priced in altogether just yet. But if we get a rally on the Fed next week, you will see a rally in the home builders and the small caps as well. I like the energy sector. It's been kind of a lagging sector for a long time. It's starting to really pick up, and it is up here. I think this is 52-week highs. Well, maybe not, but a good 6-8 month high right there. And this is a bullish continuation pattern, cup and handle. And you're going to see that cup and handle pattern on XOM, WMB, and the big Oilers, MPC, etc. Banks are doing okay. Not exactly the most robust sector. Oh, come on. But they are. Oops. They are doing okay. And what you've got here is a trading range that's slightly downhill, but that will change if and when this breaks out to the upside. And today it looks like it's just about, come on, man, just about ready to do that, right? So we've got this test, very well-established resistance trend line, RTL, bang, 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 big green stick. Volume kind of light. I don't really know where's everybody at? Because there's light volume all over the place in major stocks and in the major sectors. So that can be a good thing because it means that there's a lot of money on the sidelines and they're just waiting to see if this holds and if it stays, and maybe they're waiting till the Fed is passed and then they jump in. And if that's the case, then maybe we will get a really like a face-ripping rally after the Fed. Okay, I like the industrial sector. Somewhere we've got to play on. Well, we were long Uber calls. We were long CAT calls. Halliburton also looks very good in this space. You can buy DUSL, which is what I did myself this morning. DUSL is a 3X bullish version of the industrials, and a nice little breakout today. This is a lagging sector. You can see it's just been flat. But I do think that with cost levels coming down and the cost of money coming down, the cost of borrowing come down, you should see industrials do well. One more here. Maybe the utilities. Yeah, the utilities aren't so good. All right, I'm just going to jump over to my greens list, and then we should have a little time for for some chart requests. So over in the options room, if you want to type in the ticker symbols of a chart you'd like me to look at, just one ticker per person, please. And then I'll jump on those in just a few minutes here. But let's go through these. So Howmet is is an aerospace defense play. It's one of the best in the industry. They have a patented alloy metal that is in 90% of all the fighter jets in America, and they've got new European contracts, and they're doing really well. I talked about this one several months ago when the stock was way down here, way down here on the IBD Live show. So I've got an IBD Live appearance coming up fairly soon. I'll let you know in the room when that happens. But pay attention to those stocks because they've almost all have done well. But I like it. I like the little pullback, right? Here's your ABC pullback. It did not go up with the market. That's because it's not exactly the space that people want to be in when the market is rallying like crazy. It's a good place to be if we do get a market pullback, because I think this one will probably go up when if the market does pull back. Avgo is forming a nice little tiny little pullback off of new all-time highs down to the 21. Nice little hammer candle forming today. This is I don't know how to describe this, but this is a little mini trade, right? A little bit of pullback, and our expectation on the upside is minimal as well. Maybe it gets a little bit higher, 407, 408, but your stop is going to be really tight, and you can leverage that with some calls. You can use the AVGX, which is the leverage version of the fund. GE, I think GE is printing a double bottom. I'm seeing this pattern in a lot of industrials and in the memory storage space. Some software names have this kind of pattern, right? I've come down a little bit further than the rest of the market, but now they're printing a double bottom. You would see some bullish divergence here. I think this is a pretty low risk, high reward kind of setup. Keep an eye on this WULF. I've been watching this one. Is printing a continuation inverted head and shoulders, which is a very bullish pattern, as we saw. We're not seeing the upside yet off the little pullback, but it is tagging the 21, forming a hammer candle. Yeah, this one looks good. I'm forgetting what space it's in. Data centers, something. This is a uranium play. It's not the best looking chart out there, but I think this one has some really good upside. Rounded bottoms after a long pullback are usually very bullish. And if we draw, there are a couple of ways we could draw this RTL, but that's probably the best one right there. And if that's the case, then we have a breakout today, fresh breakout. We need a bell, right, for every breakout that just happens. I need to ring a bell. This would be a bell ringing one. I have a little bit of NBIS. It's forming, I would call this a bullish base. It has the potential of breaking to the downside, which we saw in something else a few days ago. But it's been kind of going down and back up, down and back up, down and back up, and it's banging on this resistance line up here around 99.7, just under 100. Nice round number, right at the 21. It had some good, a good write-up this morning or last night. So I think this is a good place to nibble, right? Just nibble, and then you buy a little bit more when it breaks above the 21, and then you buy a little bit more when it's above the trading range, etc. TSM, we're long calls in the live trading room. I'm sorry, long calls in the options room, and it is testing, knocking on the door of that RTL, looking really good. So I don't know this company at all. It's an industrial name. Sorry, I triggered the dog with my knocking. But that chart is amazing. It has horrible fundamentals. I don't know what the market is seeing in this, but this huge up on earnings. Some of you probably are familiar. Babcock and Wilcox, something like that. It's an old firm. And I know I read analysis of the stock yesterday, and it's totally escaping me. I mean, I look at probably 30, 40 stocks a day. So, but I just like this chart. This chart is really nice. So you have the momentum. Here's your power gap right there. There's your power gap. It stays open, right? No price getting back down into that area. So you've got a nice level of support. Came back down near it a few times, hit the 21, bounced nicely back up. And now we're back up above or at the top of the trading range and above the 21 and ready on this rounded bottom to break out of that RTL. All right. So I like that one as a low price stock, right? Don't do too many of those, but that's one I like. Qualcomm, we are long Qualcomm in the live trading room with QCML, and we bought it on the breakout yesterday, and we're getting some very nice follow through today. This is a good looking, it's probably one of the best um, bullish setups among the semiconductor space. Really like it. So EMBJ, Brazilian plane maker, horrible fundamentals 5, 6 years ago, new CEO, great fundamentals now. It's an IBD leaderboard stock. It's in the top 50, and I like the chart. I really like this chart. So my favorite setup is this one right here. So the market goes. Hold on, let me give myself a little more space, and I'll explain my favorite setup because I want you guys to know this. If you see one that looks like this, let me know. But I actually have quite a few already. Up, right? Shallow pullback, up, shallow pullback, up. And then you get this little kind of a little bit more of a complicated pullback. Takes a little more time. And I'm not worried about the support lows. This is the one I'm looking at here, this sequence of resistance highs. And when you see that, which is what we've got right here, right? Here's where it started, pullback, pullback, test, pullback, test, pullback, test. When you see that, and when the angle of the pullback, the angle of the resistance line is less than 45 degrees, that's kind of an arbitrary number, but what that means is that there's more price momentum to the upside than something that's dropping 60 degrees, right? If the stock is dropping fast, it's got downside momentum, and you don't want that. You want the least amount of downside momentum possible. That means a 40 degree angle or less. This one has it. It's breaking out today. It looks great. We got calls on this one in the options room, and we're looking for 70 on the price on that one. Shop is printing it got through earnings. Earnings weren't great, and then it did this little. It's doing this little inverted head and shoulder. So that's bottoming out. I like it. Not long. VSAT is doing something like that. My favorite pattern, not quite there, but we'll keep an eye on it. AMPX is a biotech, and that's a very good space to be in. I have a feeling, however, and it's more of a feeling than analysis, that the biotechs are going to cool off a little bit. So I'm not as interested in this one as I was, but anyway, it's a good looking setup. V-side, here's this little pullback, right? So what I call a mini trade. Nice soft pullback, very strong upside, little short pullback, 4 or 5 days, and then we should see another good momentum run higher. I'm not in this one. You can trade that, however. CORZ is back on track. So we're long CORZ with a bullish call spread, and got a little scary earlier today with a lot of the early drops that we saw, especially in growth and tech names, right back up again. And it's got some work to do because it needs to get over this 21 and the tops of these trading ranges around 17. But once it does that, it's got a good chance of going up to 19 or higher to fill that gap and do some other things. And this one has some good analysis with it too. And finally, IREN. It's not. I don't like this setup. I thought it was going to give us a little bit more of a double bottom here, but the fact that it's down near the lows of the day, I'm going to take that one off. All right, guys, what are you interested in here? I see a few. So, Okta. So this is a, oh, wow. Okta is a cybersecurity play. I know this company fairly well. I used to publish a letter for a big firm years ago. This was back like 2012, 2014, 2015 on various tech sectors, and cybersecurity was one of them. And this was one of the stocks that I got interested in for a little while. And then I don't know why, ended up really going on Crowd and Fortinet and Palo Alto. Those are kind of my three biggies in the space. Now, this is an ugly chart, so I would not even consider this one. And I do have a big green stick rule, by the way, which doesn't apply when it's at the bottom of a downtrend. And I have to say, the one bullish thing I like about this price action is that it looks like earnings were good. That's the green triangle. The market didn't like it for whatever reason. And then that turned out to be a buy the dip moment. And when that happens, when you get a big stick like that, typically that's the bottom, right? It's not going to go any lower. But the bottom is down here at 75. So it could come all the way back down to 75, test it, and then rally back up. When it's a downtrend like this, and there's just, when we looked at all those great charts, right? They're up near 52-week highs or moving back up 6 months highs at least. That's the chart you want to look for, not something like this. Okay. UNH, well, we looked at this one in the room earlier today, and I was surprised. I kind of liked what I saw. So we've got a 100-day uptrend, which is a new uptrend, because obviously UNH is, we all know the problems it's been having. Got all the way down here to under 240. And then from that was the bottom. And from that point on, it's been up. And it got through an earnings, which it looks like the earnings were great. And then for whatever reason, I think there was some more litigation coming out after that, or I don't know. I don't know the details. So the market had to price that back in. But look at what we're printing now. In addition to a nice big green stick, we've got our handy dandy little inverted head and shoulders. You'll see that a lot more clearly on the 2-hour chart or the 4-hour chart. And it's perfectly formed, and it's breaking out today, and volume is okay. It's not great, but it's okay. Got the fresh MACD buy signal. You've got stochastics rising nicely. And yeah, so this is, I would say this is a speculative buy. Where does this want to go? I said in the room, it's probably going to go to 370, which is, kind of in the middle of this resistance range up here. Maybe not quite so far as that, but you can leverage that with either calls or UN. I have some here. What is the ticker symbol? UNHG, which is the 2x bullish version for UNH. Yeah, I would say this is a thumbs up. Don't go crazy on it. It does look to me like this is, I know, big green stick rule, I know, but when it's down at the bottom of a downtrend, or if it's a fresh breakout in a pattern like this that's already bullish, yeah, you probably get a better price tomorrow, probably. But nibble a little bit now, maybe add a little bit more tomorrow, and look for a 360, 370, and trail up your stop. Okay, one more. Let's do Merck. Okay, so here's that little pullback again. Nice, very nice pullback. Momentum thrust up. Little pullback. And if you were doing a Fibonacci retracement on this, you won't even get to the 38 or whatever the first level is. It's still up there. So a little bit of a pullback. So that means that you'd have to cap your risk right below that pivot low. But this is probably going to go up to 107, 108. And it should shoot up pretty quickly like it did over here per trend analysis and momentum analysis. I would have to say a momentum setup like this is high probability to get some profit, but low probability to get a move like this. I don't think you're going to repeat that again, especially in Merck, right? But that is a nice little, it's bullish. It's bullish. You could buy right here or hold. You would continue to trail your stop up. Someone asked for NVIDIA, so I will, it's just posting some news about NVIDIA. Yeah, NVIDIA is still in my no-go zone. You can see it's below all levels of moving average resistance and price resistance. This is all distribution in here. People are getting out of the stock, not joining it. And yeah, you do have a potential MACD buy signal forming. You've got a stochastic buy signal already in play. But just the chart itself on a price basis and moving average basis, not yet. So we're actually short with some puts and one of the inverted, the bearish. No, I don't think we have puts. Do we have puts? I don't know. I have to check to see what we have open. Somewhere in one of the rooms, we are at least one of the rooms we're short. And it's just a little lotto trade, and we're not looking for a whole lot, but just kind of wanted to see if my read of the chart was correct. We got in yesterday when it hit the 21 and recoiled, right? That was our warning. Okay, NVIDIA will be back. I'm a long-term holder of NVIDIA. It's going to be higher next year and the year after and the year after, but for a short-term swing trade, it's not a buy yet. All right, guys, I'm going to let you go. God bless everybody. Have a great rest of the day. I'm going to produce this video, put a link in the room. We'll get back to trading. We've got over an hour together. God bless. We'll see you back in just a little bit. Bye for now.